Good weekend, all. Ira Epstein with your weekend edition of your SPDR ETF stock market wrap-up, and this is for the weekly charts. And it is Friday, and it is the 2nd of June, 2023, melt-up day. You heard me, melt-up. Stock market. It's like you were giving something away. People rushing to get in, figuring a couple of things, and looking at the jobs report, that the Fed is going to step back and do what? Well, the Fed's going to step back and not go with a 25 basis point hike on June. That's what people are saying. Why? Because we went up in unemployment to 3.7% from 3.4%. And the household survey shows that people are having a harder time getting jobs. Now, that also throws out the headline number where instead of getting the 190,000 jobs, you went up and got a crazy amount of jobs. You went up dramatically. Let me just bring that here for you. And got 339,000 jobs. They even made the non-farm payroll for April go up higher. Doesn't matter. Traders are going to focus, and these are the naysayers again, and they're succeeding. They're going to say your unemployment rate has gone to 3.7%. They're going to say that the household survey, if you can even pause this and read what I've written here for you, is showing people are having a hard time. They'll pay no attention to the headline, and they'll pay no attention to the vast majority of the labor force got a 0.5% rise in this report, the most in 6 months. That won't matter. The market is focused on this, and that's how this has been all the way through. What will the Fed do is going to be the big question, all right? The Fed has now the ammunition to go another 25 points, in my opinion. They haven't proven that they've broken inflation down. I haven't seen any report that shows that. Maybe you have. I'm talking core inflation. I'm not talking headline inflation. The sticky one is the problem. They haven't shown me that overall jobs are slowing down with going from 0 to 5%. What does the CME FedWatch page say? They say that the Fed is not going to raise rates. 70% of the people there, as the market measures it, not going to raise it. Okay, so that's behind the rally here. That's a big thing to be, because the traders then saying, woof, the Fed is over. You will then get, if the Fed ever goes to a pause, then the bets will be, when are they turning down? I don't see one thing here, and I'm probably the world's worst economist because I just don't see anything that says the Fed should pivot lower. Nothing. I understand the argument, and I do have an open mind to people saying you're starting to get the unemployment rate to go up. But when I dig into the report, I see there's more people coming into the sales force. Could that have something to do with it? Those are the arguments at hand. Add that to the fact that, yes, let's applaud Congress, and I am applauding them. They got a debt deal done. The president signed it. You saw his speech on Friday night. This is all great. But what did I tell you here? Not that I'm a know-it-all. I just happen to have gray hair, and I've been through it, and I've been in finance now 54 years. What did I learn during that time? We seem to always go to the debt ceiling issue. Why? Because it's full of pork for all the senators and the congressmen. And this is where they get TV time, and it's where they become very important in front of everybody and everything. And it's where able to extract certain things. You don't have to believe me. How many times has this happened? Is it 100 or something? Have you ever seen us go into a default? No, you can get extensions, and I thought we'd get an extension at first, and I applaud Congress for not going that route. It took all the uncertainty away from the market. That was a bullish force today. No ifs, ands, or buts. The Senate could have dragged this out and taken us into the extension mode. They didn't. 11 attempts at amendments were made. All failed, and they were able to pass it last night. That's important. Okay. So I'm staying with TLT, and the reason is it's so important because the market's got to decide what is interest rate. What are they going to do? You know, are we going to go back to these lows, or have we seen the low, which means we've seen the high in interest rates, and the market can start building something and saying the worst is behind us? Well, not on the weekly chart it isn't. I'll come back here for you. Here you are. And here you are with the swing line. You still have lower highs, lower lows. Where I went to school, and I did go to charting school, okay? I even created my own. As far as I'm concerned, that's the definition of a downtrend. Now, you put filters on it. I always look to see where that's at in relation to the 18-day or 18-week moving average of closes. I have this labeled as day. I made a mistake. That should say week. I missed it. These are all week. I'm now saying that I didn't do that right. But that's what it is. You're on the weekly charts, by the way. You can see that right here if you look at it. So you're under that, which means the bias is down. So I, as an analyst, if I'm trading, I'm saying, I think that the resistance is going to be 104.38. Make the market get over 105.52, and I'm no longer in the bear camp. Where might we go? Well, we went there last week. We went to the Bollinger Band. That's the first objective. Why? Because 95% of the time, the market will stay within the Bollinger Band. In a sideways market, what often happens is you can come out of a pattern and start doing this, where you hit the band, you close over it, you hit it, you close, back and forth. And you can close under it a number of times in a row. I have done my studies. It is exceptionally rare that you get 5 weeks in a row over or under a Bollinger Band. Very rare, but they occur. This is sideways action. So what's going to happen from this? A move's going to happen. All right, this is much more sideways than the pattern was here. Now, if we went all the way up there, you would see the pattern again showed itself there. Momentum-wise, are we oversold? Well, any reading under 30, I view as oversold. You're knocking on the door, and you can see you've already hit a downside. So I don't think you want to sell breaks, is what I would tell people. I would say you want to sell the rallies, risk a tight stop, and see if the market has legs to the downside. When I look at Palantir, overbought over the Bollinger Band. Now, how many weeks in a row? 1, 2, 3, 4. Again, I don't think you'll finish more than 5 weeks in a row and then down. And understand anything to do with artificial intelligence is off to the races. It is where people are throwing money like there's no tomorrow, figuring on their part there'll never be a pullback. This is the beginning of a brand new wave. Think of iPhones, think of mobile phones that first came out, and this is that wave. I get it. We're going to see Apple come out with their new headset, $3,000. What kind of nut buys things for that? It'll be outdated on you in 1 year. Apple doesn't think they can make money on it, but you got to get the product out there so you get buzz. That's what it's going to be about. And I understand that. It'll be the first one where you use your hands and your eyeballs to do things on the screen. And my gosh, that now gets me to, was it Minority Report or one of those? Remember Tom Cruise doing that in other shows? We're going there. That's where you're going. I can't wait to do that, where I move my computer screens around that. And I'm not being facetious. I really can't wait to do it. And no, I won't spend $3,000 on a headset. Never going to do that. KRE, you're losing the embedded reading. You got a reading at 2181. Game over. You can re-embed if the market next week closes down there. But to me, this was the sign to be out of all shorts. So goodbye short positions until you either re-embed next week. Got it? That's the only time it can re-embed, or it's got to do a whole new pattern, but it says don't be short at that point. KBE lost its embedded reading. So long, boys. So this big move to the downside for my money can only be re-entered on the short side at the end, not this week, the week after. Not this week coming up if you re-embed. Other than that, I look for more short covering with, on both markets, the potential to get back to the neutral number, which would be the 18-week moving average of closes. Suddenly, the industrial sector came alive. I know why. You know why? Because the NASDAQ got away from everybody, so the value players are going and say, the two areas that haven't gone anywhere are the Dow and the Russell. So if everything else is going, S&P took off, as you know, because it's got a certain amount of the AI in it, and of course the NASDAQ, I got to get into things. So they come in and they buy this. I've seen this in the futures markets over and over where people don't do well because of it. In other words, the front end of soybeans go up, so they'll buy a different crop here in the back because it's got to go. No, it doesn't. Just remember that. In XLE, this is not the week where I wanted my traders into the market one way or the other in energy. We have a big meeting on Sunday, the OPEC meeting. Which way is it going to go? Is it going to go the way that the Saudi energy minister threatened 3 weeks ago? If you're short, you're going to be hurt, which basically he's saying production cut. Or is it going to go the way that Russia said, where there's going to be no production cuts whatsoever? I'll let you decide that one and where that's going to carry it. I don't want to play it. Now, in the foreign currency market, if you have interest rates go up, if you have a Fed that is going to possibly go with another 25 points, the dollar goes up on that news, and euro goes down. It's exactly what happened. If we take a look at GLD, all right, what's gold going to do with that? Well, gold's problem is very clear. The problem for GLD is the headwind of a strong dollar and higher interest rates. If the Fed rotates and does the word skip or pause, whichever the pundits want out of that, then this probably is looking at a bottom here and starts its resumption of an uptrend. But notice how the market went to the Bollinger Band and stopped, fell back to what I call the line in the sand, the 18-day average. You heard me say that back here. You're hearing me say it again. If the market closes underneath this low of last week and under the 18-week average, you reinstate the bear trend and you open the door up for the possibility here. What would it take to do that? Probably the Fed going with 25 basis point hike. When I look at the gold miners, well, if gold's in trouble, the miners can't be good, and that's the way you look at that. Then we go to Tesla, and guess who's the world's richest man again? Ta-da, Mr. Musk. Now, we are up to the point where I think the smart money's taking money off the table. Why? Only 5% of the time do you stay above or below a Bollinger Band. That doesn't mean you can't develop a downtrend and run with it. If the market should pop here, the next number is 249, the 100-week average. But I think this is your resistance point. You're already overbought, and you're up there. AMC can't seem to get out of its way, but in all fairness to the movie theater chain, the big blockbusters now are going to start rolling out. We'll see. I am so anti-owning movie theaters, don't know. But in Chicago and Batavia, I think where they did it, they opened up a 96-foot screen. 96 foot, that's long. I don't know how high. It's got to be 2 stories high or more. IMAX, first one. I'm waiting. I will probably drive out there for the experience just so I can see what it's about. Be open in 2 weeks. The regular theater open. I think it's called Imagine or Imagine is the name of the chain that did it. And they put in $11 million to open and redo this movie theater. It was an existing one prior, which is smart because it's probably got the stadium seating and all I'm taking. I know a lot about that, having owned the movie theater. Bad experience. Higher high, lower low, oversold. I can see where the market just are stuck here waiting for an event. Apple. Well, Apple's going to have its release of products. You never want to be short going into that. Why would you? So you're going to get the new iOS systems for the watch. You're going to get it for the Mac. You're going to get the new headset, as I said, and we'll see what other surprises they have. But there's always good surprises, and markets rally on that news. Plus, it's got the AI going with it, so I like that still. Then TLT, which is interest rates. All right, now, we just covered that. Why am I going back? Because this was from last week, so won't cover that anymore. We already did it. One thing I do want to cover with you, and you understand, these are the free offers that we offer, and only some of them. The page drops down even further. So it's on our website at iraepstein.com. One of the things you should get is right here, the daily QT price counts. If you haven't seen price counts, you want to see them. We put them out every day of the week. And in the price count, it's our own proprietary formula where it tells you it's not about buy here, sell there. It's about if a trend is established, where might the market go? With high probability, what we call first count, less probability to get to the second than the third count. You can go 5. It's very rare you get beyond 3. I've seen it hit 4. 5 is insane, but you always have to put it there if it can get there. It would take a world event of some magnitude to make that happen. However, you will see over and over that first price count is a high probability count. And that's the word, high probability count. Then you'll see all the other offers we have. You click on what you want. A form will come up. You just put in your email address, name. We take it the rest of the way, and we'll get everything out to you the next business day at the latest. You can even, this is where you sign up for free offers to my research and the like. So to get it, you do what I said. You can click the cursor that you'll see up here. That'll work for you as well. IraEpstein.com, free offers. Have a great weekend. I'll see you all come Monday. Take care.